Good morning. Happy Sunday. Kickoff of the NFL, full slate. That should be an exciting day today. This is Jeff Scott, and welcome to this week's top-down review. Again, my name is Jeffrey Scott, and my email address is hgsidoc@gmail.com. And nice to have you here today. Last week, I said, is this the time to sell Rosh Hashana? And it turned out to be that was correct as the market sold off. In fact, the S&P was down every day. And now the question becomes, will they buy Yom Kippur? Yom Kippur, I believe, is Thursday. Let's take a look at the markets and see if we get a sense of what's going on and maybe help make a plan for this week. As always, this is for educational purposes only. I'm a doctor, not a broker. I'm independent. I pay for the tools that I use. Trading involves risk, and you are solely responsible for any decisions you make. Again, if I identify picks that I'm interested in, I may already own them. I may never buy them. And I am pointing out just because I like a pattern and how I might handle them, but this is education, not trading advice. And I may talk about the use of options, and many folks believe that options are very risky, and I refer you to the Options Industry Council for their education so that you know what you're doing before you put your money at risk. I've had a lot of influences in my trading. Many of them are up here, and to me, what works is to learn from a lot of different people and take the best from each of them, the things that resonated with me, and use it to put together my own style. For a while, I was helping people learn. I was, quote, retired after selling one of my businesses before starting the next. And I used to call my education, be your own guru, because who cares more about your money than you do? I own a lot of tools, and I forgot to add this here, and I just want to comment about it. If you come and see me during the day, you're going to see TradeStation and Thinkorswim up on my different computers. Now you're also going to see this product called Wealth Charts. And it's kind of maybe the modern version of Metastock, in which it's a platform with data, charting, scanning, news. And then like Metastock, a lot of smart people have partnered with them to put their indicator sets in. I also use HGSI and EdgeRater for analysis. And then in TradeStation or Thinkorswim, you'll see Dr. K's tools, Q tools, and certainly John Person's indicator sets and everything that I do. Everything I use, I pay for, and no one pays me to say good things about them. I'm an unpaid volunteer, and this is just education. The website for HGSI, which I'm not affiliated with, is highgrowstock.com, and on this website is under my account, under free 30-day trial. You can sign up for a trial without a credit card. Under investing strategies, you'll see hundreds of movies. Somewhere buried on there are some starter videos by myself, Ron Brown. And if you're new to the product or you don't understand the vocabulary, if you email me at that hgsidoc@gmail.com email, I'll be happy to share with you some training material. Before I forget, I record this in 4K, and I store it in the highest resolution that YouTube will allow me to store it. Actually 8K, but I'm not going to record it 8K. So 4K, it's a very big file, and therefore it takes forever to upload. So the initial view will be in standard definition, which is awful. Wait till you get it in full view. And if you don't know what I'm talking about, watch the first 5 minutes of last week's video. I'll show you how to make that happen. Stock patterns are cyclical. I think you have to ask yourself on every stock, industry group or sector or market, as you look at them, where are we in the cyclical pattern of that instrument? Not everybody, not every stock, not everything works together in concert. So you could have at times things going up while other things are going down. Where are we today? Clearly, it feels like we're in the circle here. It feels like maybe At the end of last week, things got weakened, and then this week, meaning the week we just finished, the market rolled over. The question is, will this be like every other pullback over the last several years, and certainly the last several months, that the market rolls right back up to new highs? Or is this one going to last from days to weeks longer, and are we going to pull back and get down to that 8 to 10% correction or worse? I'm concerned about the correction. I don't see us going into a big bear. I think I'm jaundiced, and so are many other people, about the last bad correction, which was in March of 2020. Or that was a bear, although it was rapid. Most pullbacks, bear markets, don't feel the same way. They're not over so quickly. They don't fall so quickly. But I'm a little bit nervous in this market. I think you could tell last week when I talked about my contra ETF hedges. So if I think we're over here, it means, well, personally, I bought puts on a lot of my positions. Apple, I had 150 puts before it decided to fall last week, so we'll see if that was smart or not. I sell calls to pay for those puts. I'll sell some calls that are a little bit out of the money. I'm short contra ETFs. I got a big short triple Qs, TQQQ, which I will have my finger on the sell button when the market opens, because I don't let those get far away from me, because those can move quickly. I'm long VXX to a big amount, and I'm also short SPXL, as well as some, a lot of individual puts. But most of the puts that I have, frankly, that are not contras, are on stocks that I wanted to collar. So those are insurance. So it means that if the market rolls up higher, I probably won't see as much of the gain because of my hedges. And if the market drops hard, I won't be fully protected because I'm not 100% hedged, but I will blunt much of the pullback because of the hedges I have. I call that my make it easier to sleep at night approach. You could see on Friday, well, look at real estate, probably 90% red. You look at healthcare, mostly red. You look at utilities. Hey, this is defense. This should be easy. This should save me. No, it was all red. So you could see, I won't call it a sea of red because there are some elements of green, but there really weren't a lot of winning sectors. And for note, these are based upon the S&P 500. And when I talk to the Q Edge tools, they're based upon the S&P 1500. As always, if you hear moaning and groaning in the background, it is not me grunting. It is my dog begging for treats. So he always decides when I'm doing this that I'm vulnerable. So here's the S&P 500 futures, the E-minis. So first thing I look at is, this is nothing new. I mean, if we go back to November last year, it's been a pretty straight run up for the last 10 months, give or take. But we continue, especially at these fib areas, to see pullbacks. Fib area, pullback. Fib area, pullback. Fib area, pullback. So as and you can see we got a fib area right above where we are. So is this anything different than we've been experiencing? It doesn't, I can't say, not yet. But what does that tell me? That a retracement here to this 50 is probably likely. But what would you expect to happen after I hit that 50? Well, unless something has changed, and it will change at some point, expect it to bounce. So do I think we have another day of weakness or two? Certainly wouldn't surprise me. And if the market is perfect, we'll have 3 days of weakness and bounce on Thursday, just like the old adage to buy on Yom Kippur. Although I'm Jewish, so when I say most Jews, I'm reflecting myself. We'll be out of the market on Thursday because Yom Kippur is the holiest day of our year. So Friday is the day we come in, but I guess people might start buying early in anticipation of that volume coming in. So pullback, yes. Am I running? Am I jumping out of a window? No. Felt worse than it maybe was. Sell signal here, high of the year is 1, 2, 3, 4, 5 days ago, the prior Friday, which by the way is the all-time high on the E-mini futures. If we look at the Nasdaq Futures, probably not the same level of ascent, still going up, but perhaps at a slower rate. Also hit a high, 1, 2, 3, 4. So on Monday opened up higher and then closed with an indecision bar, a new sell signal as well, sitting on the 17, which has held often. But again, do we have a visit down to the 50 in store? This was a beautiful one right here. And again, I have to believe that that would not be out of the question and maybe even likely. The issue will be, will it hold? So let me make this look like the rest. This is the Dow Futures. Now this is what gets me nervous. The Dow Futures broke hard below their 50. Down to the 200 is a pretty huge move. That would be a pretty significant drop. But you can also see that it hasn't really respected the 50, where it's dropped and recovered quickly. So could we recover on Monday? Absolutely. Do I think we will? I don't have a crystal ball. My guess is we got a couple more days of weakness, but we will see. We look at the Russell. I'll go back to the Dow. The Dow, despite the fact that it's the weakest, its all-time high is only a couple weeks ago. Looks like it's less than a month ago. And then if we look at the Russell futures, this is the one that's clearly been in a box. This would define the high back in February, I guess, would define the top of the box. The bottom of the box is here. We're in the middle of the box. We'll look at that again. Now it is pulled back to the 50, but clearly of all of them, this one has least respected the 50. If we look at the VIX started moving up this week. Now I have a long position, long volatility. And again, it's a hedge. It's a big hedge. And I guess if I was convinced the market was going to blow up, I wouldn't have it as a hedge. I'd have less long positions that I'm hedging against. Now, its challenge has been it can spike above this 200, but it's really, it's a 1 or 2 day wonder. So what I do is if I break above the 200, I'll probably take half off and then let the other half run. But it's profitable. We shall see what happens with VXX. And I don't have the stock. I have a lot of calls. The dollar, no surprise, the rise in the dollar, the Russell got weaker. The fall in the dollar here, the Russell got stronger. Right now, the Dow is kind of coming into an area, the dollar is coming into an area of resistance. So a weakening of the dollar would probably support my portfolio and certainly my small cap growth portfolio, but a strengthening dollar might be a sign of economic weakness and a flight to safety, and that may not be necessarily what I want to see in my portfolio. Although I do have some long dollar positions just in case as a hedge. All right, so that's that. Let's look at weekly charts. And yes, I do the same thing every day that I do here. And I just want to point out that as much, quote, bearish feeling I am today, you got to look at where we've been. March 23rd low, almost straight off the bottom. Are we extended? Look how far we are from that 200, and we're a week off our highs in the S&P E-minis. Same story could be said about off the March lows on the Nasdaq, nearly straight up, just off the high. Sorry about the dog. The Dow, again, it probably took a little bit longer to get moving, although when you look at it on a weekly chart, it looks great. A little bit less elevation here, as it seems to be going more sideways. And you could see on the weekly, even the dollar's got a weekly red bar. You can reverse the next day. We've done that, our next bar, that's possible, but that's bothersome, short term. The Russell, which had a big move up, has been sideways. The VIX, which obviously peaked as the market was bottoming in March, really doing nothing on a weekly perspective. And the dollar, although it's rallied up off the bottoms, is still way off the low. And this is what happened with the market crash. You can see what the dollar ended up doing. All right. Next thing I like to look at are these, you know what? Just because I'm going to forget to do it later, let me switch this back to daily. I hate it when I'm looking at something and I'm making an opinion and I realize it's the wrong time frame. If we look at the expected move charts, and just for very quickly, remember, this is the option sellers, the market makers, are trying to define what their risk is of a move in the next week, 5 days. And they're looking at, if I sell a call and sell a put at the money, a strangle, how much do I have to sell it for? So the majority of the time, probably 70, 75% of the time, the stock price or the instrument price is going to stay where I don't lose money. So I'm a risk preventer. I set the cost at a level that I'm comfortable with, that the markets will stay within. When I did an analysis a few weeks back, it was about 80% of the time that the price stayed within the range that the market maker, the option seller, the smartest money in the world thought it would be. This was a week where it didn't exactly work. You could see the S&P 500. So it starts at the close of the prior week. Here's the close. So this is the center of the expected move. The delta from top to bottom reflects the move anticipated by the option maker, and the price of that strangle would be between the white and the green, or the white and the red. You can't go both ways, and you can't close higher and lower at the same time. So either the stock will trade up and go above the green, and when it goes above the green, I lose if I'm the option seller. It'll trade down and go below the red, and then I lose if I'm the option seller. But 80% of the time, I know that it's going to stay within that range. So we opened here on Monday, Tuesday, Wednesday, Thursday, Friday. We sold off each day. We closed below the range. One would expect that we might see it open below and then trade up this week, but you never know. So you could see this is the starting, and you might also notice that this range is a little bit wider than it was the prior week, even though it's only a 4-day trading period. If I look at the Nasdaq Futures, we stayed within the range, so the option sellers won. But after a positive day Monday, nominally positive, Tuesday, Wednesday, Thursday, sold off. Compare that to the prior week where we just ran around the top. If we look at the Dow Futures, another loser on the option maker side, because they have traded below the red line and really traded hard, closing well below it here. Now, how do I use this? It gives me a sense of what's going on, but if this was in the week, and I saw this bar below, then this bar where it closed higher, that's a reversal bar, I could have set a buy stop for the market above the top of that bar and got back stopped in on this last day of the week. So I look at it to spot potential buying opportunities. But you can go for many days in a row, which we'll see on the Russell. So the Dow traded below, week on the, look at the Russell here. This is, it did a stutter step on Thursday and closed below on Friday. Look at this 2 weeks ago, it just kept getting better and better. It had this massive move, a week of consolidation and sell-off. I use them to find reversals. That's about it, and to get a sense of the market. I'm not the option seller, although they're the smartest money and they're the ones that make the money. Volatility, interestingly, actually closed above, and the dollar stayed within the range. So what do I glean from that? I glean that at least on the Russell and the Dow, and a little bit on the VIX, that it was a pretty violent week. I know that because, hey, I got a portfolio too. Although I would put violent and tough in quotations, because it wasn't like last year in March. So here's the run-up of the market. This is just a linear regression channel that I manually wrote. I can put it in automatic with indicators, and you could see we are above the lower line. And would it surprise anybody for us to get much closer as we did over here? Wouldn't surprise me a bit. And again, I'm looking perhaps for a couple more days of weakness. If I look at the Qs, that was a spiders. I look at the Qs, really the same story. We're below the center, and it would not surprise me to see us come down some. If I look at the diamonds look different. Diamonds have broken below. They've done it here, they did it there. I'm going to be watching these. I'm hoping to see them get back quickly, but if this is something worse, that might be bothersome. And then over here, we have the famous IWM. And if you wonder what a Darvas box looks like, here's your Darvas box. You sell at the top, you buy at the bottom, and we're heading down towards the middle. Now, I did look at it this way. Let's just reset this. Not sure if I need to do that or if it resets automatically when I switch, but I like things to look the same when I open them up. I actually looked at a shorter time frame, and I put some automatic linear regression channels on. Don't remember if these are the Maestro Bob indicators or I know they're right in front of me, which is always the worst place to hide something. So this is put on 3-month linear regression channel put on by the computer, and you could see the breakdown here at the bottom of the channel on the Qs, significant break by the diamonds, and how we're just in the midst of the box but coming off the top of the channel in the Russell. I look at all these and I see potential weakness. All right, back to the slides. Let me skip across the ones we already looked at. Rates, I didn't see much movement in the rates this week. Some were up a teeny, some were down. So I called it held steady. These white lines to me are happy lines. That above those are lines where the economy is still strong. This line here is not a happy line. This is when the rates get high enough to hurt the market, especially on the long end. And we're still in an area where there's concern about the markets. AD lines, you could see a little bit here. It's harder to see here, but they both pull back with the indexes, as you'd expect on a weak week. I hate that. You can see here on the NYSE, we continue to make maybe a higher high here, so we'll see if that's something. We'll have to see if we get a lower low here or if we get a higher low. But you can see the big guys, the spiders, the Qs, the diamonds, and even the IWM turned down. Transports have been weak, and the bonds really didn't do much this week because the rates didn't do much. Breadth on the stocks above the 200, stocks above the 40, both dropped as the market pulled back. We are not into an obvious correction zone yet, or reversal zone. Stocks above their new high, new low, 12-week or 3-month, we're down here. This is one I watch closely. When I get down here, it's happy times because, well, it's sad for your portfolio, but you know you're going to reverse. We can still drop. Daily McClellan, I'm watching on the oscillator. I'm watching here. Every time we've hit this yellow line, except this one, we went down to the bottom to that white box. But this is a reversal area. We're not there yet. If I look at the weekly, similarly, we're not there yet. So, you know, if the market plays my playbook, which, you know, this is Sunday and I'm guessing a week. So it's just hypothetically, we could have a couple more days of weakness, and some of these things that I'm showing, whether it's the 3-month new high, new low coming down to this area, whether it's coming down on the summation index, on the oscillator rather, on the daily or on the weekly. If these things start to fall into play, it might set up a very obvious time for a reversal. Also in that book are the buckets. I've now got 17% of the stocks trading below their lower Bollinger Band in the S&P 1500. That is a meaningful number. That is a meaningful number. But I'd rather see it at 30% for me to buy it. But it's telling me we're getting closer and closer to a reversal zone. This here tells me 2/3 of the stocks are below their midline in the S&P 1500, also a sign of weakness. No evidence of a Hindenburg on the NYSE period. About a month ago, we did see some stuff on the Nasdaq, which I pointed out. I don't know what that means, since the traditional Hindi, which not everybody even believes in, is calculated on the NYSE. Market tone, well, we flipped. We've got some red in it, which we didn't have a week ago. So at best, it's mixed, certainly weakening. Now, I call this a tough week. If you look at the Edge Rater warehouse report, so for those that are new, I take fundamentals from a week ago, and then looking forward, how do those fundamentals impact on market performance? You could see down here where I look at EPS rank, where it gets higher to the right, and the y-axis is performance. There is really no relationship between EPS rank and performance, except every rank was negative. Same thing with relative strength and group rank. And if I look at ERG, which is E plus R plus G, and I throw out the tail and I throw out the head because the number of stocks is little, it's relatively flat in the -2 to -3% range. If I look at various groups that I like to follow, I can see that in red here, the S&P 500 was down 1.69. When I look at my stuff, my filtered buys, which is my most pruned buy list, was actually up a lot. Well, it was up over 1%. That's a lot when the market's down 1.6. But my own stuff was down closer to 2%, as was my general buy list. The IBD 50 was down a little bit worse, and the weekend review and MarketSmith were a little bit better. So I won't even say it was a bad week for growth. It was just a bad week. Pretty broad-based weakness. We look at the sectors in the S&P 500 and Edge Rater. Again, similar to the market, we've got some red things popping in, so we got some weakness. We're looking at the Woody indicator. If I look at it in the Q-Edge tool, now the big switch to tell you is that the Q-Edge tool is looking at the S&P 1500, which is much broader than the S&P 500. And if you think about the markets off the bottom, it's been narrowing and narrowing of leadership. And so there's been a difference in appearance between the narrow S&P 500 and broader S&P 1500. We can see on Friday, mostly 91% of the sectors, 86% of the industry, and 77% of the stocks were negative. If you made money on Friday, that was great. If you look over 5 days, all the sectors were negative. All but 1 or 2 of the industry groups were negative, and most stocks were negative. And now this is starting to filter upwards. 2 weeks and even 4-week performance are negative on the markets. In the center one here is sector performance. You can see in the S&P 1500, all sectors were negative. And if we look back 10 days or a month, only 2 of them had any positive to them. And so it's been a weak market. This down here shows that on Friday, you had one positive sector, which looks like it was probably energy. Everything else was negative. Actually, the red, nominally positive. And when I mean nominally positive, the number's above, but you can't even see the bar. Now, over here, I love it. This is one of the things that Sager did. I won't say for me, but maybe because of me is a better way of putting it. I got real-time buckets. I don't have to run EdgeRater during the day 25 times. I still love EdgeRater and use EdgeRater for a number of things, including the bucket analysis. But now, real-time during the day, I could see Friday 68% below the midline. The little bar was Thursday. The big bar was Friday. You could see how the markets, I call this a shift to the left or shift to weakness, where the markets on the buckets got significantly weaker on Friday. Now, on the Q-Edge tools, the leading group was energy, materials, staples, and you could see that energy was strong, has been strong over the past month, and utilities, real estate, both of which could be defensive despite a bad market, were weak, and the other defensive thing, staples, has been bouncing around of late. I'm not going to go deep into this right now, but I'm able to identify which sectors to look at, build the industry groups. This would have been energy and materials. And then this is a list of stocks that I found that were undervalued with high earnings using one of the search tools in the Q-Edge. Canaries in the coal mine. These are the big stocks. Obviously, Priceline's called bookings. So is this a small pullback here? We got a negative person signal. The weekly bongo went red. We had a red candle high a couple days ago. Also a sign of a potential reversal. Not much on the positive relative strength here on the market catcher. I basically, you got some targets here. Natural targets, if it's a really bad pullback, is probably the 200. You got the 50, you got the 17-day. I think we pull back. Hopefully it's only a couple-day pullback, because as you could see, these things have held up relatively well, although they're still off their January highs. Know your news and earnings, budget information from the Fed, CPI, core, that's got to be important, CPI. Import prices, production, capacity, jobless claims. Pretty busy week and the federal budget comes out on Monday, and even on Friday we got some sentiment. Not very busy on earnings, but hey, Oracle's a widely held stocks. Solar. So if you have something, it's important. And as it says down here, it's a judgment call to hold stocks over earnings dates. It's bad judgment to not know when your stock's earnings date is scheduled. Is this February 2020, and are we about to take a bath? This is the index option adjusted credit spread on high yield devices. And for those people who know a lot more than me, they would have picked up that in 2020, I don't know what this box here, this is the 2019 high, yeah. And this was a prior correction in the market. You could have noticed in January, before the market rolled over, that this option, index adjusted option spreads was peaking. This was sign of tight money in the marketplace, and this was occurring as the market was running up before it imploded, all right? There's nothing happening here right now. So I watch this because it gives me a clue. I don't think this looks like February 20, and I'm not expecting a massive meltdown. So we got the first half, the old selling Rosh Hashana this week, when we get the back half on Thursday, which is Yom Kippur. Tough week in the market. You can read it yourself. All 11 sectors in the S&P 500 were negative on the week. Lots of news. Goldman Sachs reducing GDP. Maybe that means they stop the easing discussion. Enhanced unemployment benefits expired. Manchin wants to support only a smaller infrastructure bill. ECB started to reduce its purchases. We got debt ceiling stuff. Crypto sold off. I mean, there's a lot of news there. and I think that weighed on the market. I took heat like most people who are long did, but again, I had a short trip TQQQ, short SPXL, long VXX. Took some off on Friday, still probably net long. Market looks risky to me. A few more days of sell-off will trigger the bucket reversal buy. Still a challenging time on the calendar. No reason to play hero and put all your profits at risk. Thus, I do have less positions. I got my hedges. I raised cash, puts on my larger positions, like my Amazon, like my Apple, and I still have some longs, but I don't know what I took something out there, so I still have some longs. I'm going to take this out. All right. Let's go look at charts. You know, this is not well, I can't say that for everybody. For the way I trade, this is not a marathon. It's not a sprint, it is a marathon. I'm not looking to make a killing in one day for my retirement. I'm looking to take my nest egg and grow it and grow it and grow it and grow it. And a little bit here and a little bit there. I'm not playing for grand slams. I'm playing for consistent single, doubles, and occasional triple and home run. Let's take a look at the markets. Here's the E-mini futures. If we go back to Wednesday, I got a John Person sell and a Lagar sell at the same day. I pay attention to that. Each time I've gotten those to fall at the same time, the markets had a modest pullback. This is probably not enough based upon the prior. So do I think we come down another day or two? Yes. Do I know that for sure? If I did, I'd either be a witch or a liar. So I don't know that for sure. That's how I'm playing it. I can see the high jump has come off, so I don't have a risk there. And if I want to be bullish, my longer term bongo, which is the center of this, is still green dots. My weekly is still in a buy. My monthly is in a buy. The red candle here says, Alexander Elder Impulse Indicator, I'd rather be selling it or holding, not buying it right here. So I'm looking at this and I see it's not necessarily done going down. Look at the Dow Futures. Dow Futures look getting closer to a time that I might be considering nibbling, but I don't buy falling knives. And this is a falling knife right now. It's in a person sell and a Lagar sell. The weekly bongo has gone red. It's a red paint bar, red on the weekly. So it's getting closer to, it's at the bottom of its envelope. So you'd expect it to start to think about reversing soon. But as we've talked about earlier, it can knife through as it did back here. So that doesn't look strong. Maybe looks like it's getting near a point of inflection, but it's still ugly. Look at the Russell, top of the channel, person in a Lagar RSI sell. It's red. It's been, weekly bongo's been red for quite some time, and we really haven't taken out the highs set up here. Still in a buy on the weekly and the monthly, got red paint bars. Do I want to be long or short the Russell? I want to probably be short, just like the others, looking for a bounce. This one could drop some more. Then the Nasdaq, again, probably too early to say I expect a reversal. I've got a Lagar and a person sell on Thursday. Friday, red paint bar, lots of bearish MACD divergence up here, which is something that often leads to a sell-off. We had the MACD divergence there. What do I mean by MACD divergence? It means from here to here, from here to here, I got higher highs on price, and I got lower highs on the MACD histogram. So I look at the markets here, I see weakness, and I see a lot of reasons to be concerned. The dollar, here's your Lagar and your person buy signal, buy on the weekly, buy on the monthly. The dollar looks stronger than the other indexes. which isn't what you really want to see if you're long equities. We go into HGSI. Let's go into Major Markets Plus. Make sure I got, yep, that's today's. Go to Major Markets Plus, hit Warehouse View, and let's leave it there for a second. Let's look at the top-down view. Where was, make sure we hit raw combo. So when the VIX high yield are at the top on the 5-day performance, and on the bottom are small caps, Bitcoin, gold, mid caps, industrials, Russell 2000, ARK stuff, you know it was a difficult week in the market. It was a difficult week in the market. Let me alphabetize that to make my life easier. And let me find the SPX. Guess it doesn't, oh, never mind, because the dollar signal. Let me bring this thing up here. Let's take a look in HGSI. I'm going to go quickly on the indexes, and then we'll look at some industry groups. If you're getting your pen out and sharpening it, or pencil, to see what I'm going to tell you to buy, don't waste your time. I'm not buying a lot of stuff on Monday. There are times to buy, and there's times to hold, and there's times to sell. And right now, I'm somewhere in the hold and sell camp. S&P 500 and the cash markets, and let me just make this larger. We've looked historically already. And I guess the point here is the weekly bond all went red. Here was some mobile breakdown. Here was a person sell signal. The PSA or dots above it. I'd expect it to come down at the minimum and test the 50. It's still right at the chandelier stop, which hasn't flipped yet. So this could be a bounce point. I think this looks like you're coming down at least to test the 50. You can see on the weekly as well. If I look at the Dow Jones Industrial Average, it is broken below the 50. So, you know, does it bounce from here? Look at the weekly. Does it look like that's ready to bounce? I don't think so. On the weekly, my target here is down here in the 32.30 range probably. You know, do we come? I hope not, and visit this 200. You know what? We could, and it doesn't even, the market's broken. In fact, what would that even be from here? Let me draw a line and see. Let's say that the 200 does this, and let's say that we come down and we visit it. It's 4%. Does anybody believe it's impossible for us to pull back 4 or 5% and revisit the 200? It'll hurt. It'll hurt big time, unless if you're over leveraged long. I think that's very possible. If I look at the Russell 2000, you know, again, you got the 200 over here. You've got a box. See any reason to think that it shouldn't stay in that box? I don't. You sell the top, you buy the bottom. We're in the middle. Which way do you go? I stand aside, unless you've already got a position. The Nasdaq, I don't know if we looked at this or not. Again, like the spiders, here's the chandelier stop, here's the 50. Would a pullback to the 50 be abnormal? Absolutely not. Maybe that's what we should expect. So Ian used to talk about the high road and the low road. And let's look at, let's look at the spiders. So if I'm a betting man, okay, if I'm a betting person, probably not going to take the high road. The high road would be if we are at the bottom of our And we're at support on the linear regressions right here, and we just go straight higher. That is the high road, all-time highs. It certainly could happen. Probably not my most likely thing that happens, but it could happen. The low road, that one's pretty easy to figure out. Low road is we trade down to the 50, maybe we stutter step bounce, and we come down to the 200. I guess that's a 7.8% drop. All right, still not the end of the world. And then you got the medium road, which is probably what we get, which is, let me change this to blue, is that we pull back and we bounce around here, and then we get into later October and the market goes higher. If I had to be a betting person, I'll take the center road and think that we're going to come down a bit, bounce around on that 50 for a while, aka what we did here, and then it wouldn't surprise me for us to rally in year end. That's also a little bit of hopium because, as I pointed out, I'm still mostly long, although I've got a fair amount of hedges in play. All right, next thing I look at are the indices. Well, before I do that, let's look at the 50. Heard something interesting about the IBD 50. My portfolio has a lot of IBD 50 stocks in, so nothing makes me happier when the IBD 50 starts its run, which it did here in August. I'm a big believer in canceling. In fact, this weekend I'm going to San Francisco for the regional or IBD user group 2-day meeting. Maybe I'm crazy because of COVID, but I'm vaccinated, I'll wear a mask. And so I'm a fan of canceling. Turns out they changed how the IBD 50 is developed, and they've started putting more weight on sales. Used to be earnings. Not a big surprise, because if you watch IBD Live for 6 months, they've been talking about how it's sales growth that's mattering as much as earnings growth. So IBD 50 is a lot like my portfolio. I love seeing it up. Do I think it can come back here here's the chandelier stop? So give up a little bit more? Absolutely. I'd hope for a bounce here. Hopefully it pulls back and then bounces with the rest of the market. It certainly looks much better than the indexes. Lots of green here. So I'm still positive on the IBD 50, but expect a little bit more pullback. The FANG stocks, this is the pure FANG, unlike my extended FANG. A little bit weaker. You've got a low close doji here, at least by my calculation, although it wasn't called that on the chart, where you close, maybe that didn't count as a doji because it was too thick. All right, maybe that's the case. Regardless, you got a sell signal. But again, here's your chandelier stop. You got a couple more days and you could hit that and bounce. Wouldn't surprise me. If I look at Biotech, which was somehow near the top of the list up here, you can see Biotech is still above the 17 and the 50. So although it had a bad day on Friday, selling off, it's still way above its moving averages. And there's been a lot of strength there. And you'll see in my buy watch list quite a few Biotech. So I guess it's not a surprise. And semis, which have been the leader in the market, like Biotech, mostly sideways, although it was a negative day on Friday. Did it close negative? They've actually been up on Friday, but it closed lower than where it opened. Notice that the weekly bongo here being red is just because it's just going nowhere. A lot of people like to look at what some of the ARCs are doing because there's a lot of the same stocks in your portfolio. Not a passive investment. This is one where A, you need to be active like it's a stock, and B, where it's managed pretty active by Kathy Wood. So above the moving averages on the robots, but rolling over. See if the averages can hold. FinTech pulling back, still above the 200 at the 50. Genomics, well below the 200. Innovation, below the 200, and it looks like it's below the 50. Israel, above the 50, below the 200. Next gen internet, you can see here, It's below the 10, below the 200, above the 50. What was the innovation? Yep, it's below all the indexes. Don't see a lot of love there and a lot of, I have to go out and buy that, do you? When the markets turn up, you'll see these things start moving above their moving averages. Right now, we're in the land of chop with a twist of downside. Bitcoin. Bitcoin sold off this week. I know that when my son is depressed. It's funny, his Bitcoin costs are probably in the high single digits, low teens, and he's done very well, but this thing sells off from time to time quite hard. Let's go look at the dollar. Short of futures, I really struggle with a good way to play the dollar. The UUP and the down dollar ETF just doesn't move much. All right. I mean, you could buy $25 calls for pennies at any time in the last couple of weeks, and you could buy a zillion of them, but it never moves much. And you can see the dollar here. I mean, if you're in it when it does this kind of a move on the weekly, woohoo! But the dollar's pretty steady. It's off of its highs. We know from the other that the dollar's been higher, and now it's starting to move up again. We'll see what happens. If the dollar shows strength, we know what that means for gold. And gold is just struggling to get above its moving average complex. Hard for me to get excited by gold until it breaks above that 200-day moving average. Silver, ditto, and gold miners, which have been looking like silver, really don't look very strong. Then I go to 07 Industries. I hit warehouse, they'll pop up here. You see I got 174. Let's just go to 2-day force. I've only got 13. Last week we had about 90. Or maybe it was 2 weeks ago 90 and last week's 60, 70. But the numbers come down. That means the bullish participation has dropped. If we look at short-term bearishness, I got 19. If I look at long-term bearishness, I got 76, or intermediate term. It's not really long-term. And intermediate bullishness, I got 13. So this market's gone decidedly bearish. When I get bearish in the markets, when I buy contra ETFs, I do better holding things long than being short things. It's just my gut. But I do have hedges, as we talked about, which are shorts or puts. Base metals were the top. Well, let me make sure I do it by raw combo. Top group is biofuels. I know my neighbor, ex-neighbor, whom we had dinner with last night, owns Gevo, because she told me the other day when it popped up. And I've learned when she gets excited because of a move, I short. No, just kidding, Kathy. But it had a one-day wonder. It's the right sector. It's something that is very green, in that it's a alternative fuel industry, biofuels. Certainly with the new Green Deal stuff and the infrastructure plans, you would think that this would be a strong group, but it's really done nothing. And then it had some news on Thursday and popped and came back to earth on Friday. I have learned over the last several months to sell the pops, just because this is a very typical story. It's also the only one above its group index. And you can see this one, if I wanted to buy something and hold it, this one here looks interesting as another one, AMTX. Why is it more interesting? Because at least it's starting an uptrend. But I don't think I want to buy either of them. Base metals. Uranium has been super strong. You can see this is broken out, Cameco. It keeps on going. I thought it was extended over here, and that was a mistake. Looks great. And notice one of my favorite things about a stock. It was going down, while its market catcher was going up. And then it had a reversal. multiple kahunas, person buy signal, a mobile breakout, and coming off of a squeeze. That was a perfect buy point. It is not a perfect buy point right now. Alcoa aluminum is broken out, already running. Look at the earnings per share growth. If these are held up, it's probably not even too late to be buying. Freeport McMoran, this one I might be watching and looking for a gap up and a break of this downward trend line here. In fact, I was looking at a study over the weekend that said the best time to buy is when you get a gap above a downward trend line. And a weekly is even more impressive than a daily. So this is one, I wouldn't be buying it here because right now we call this a downtrend, but a break above this, especially gap above that, would be interesting. And again, look at the earnings per share growth in Freeport McMoran. Energy Fuels, I am playing this one. This is a cheap uranium play that broke out similarly to the Cameco, but not nearly as impressive. This is what I do every night, everyday entertainment facilities. I look at the ones above the average. This is AMC Entertainment. I don't play the meme stocks intentionally. Sometimes I play them and not realize they're a meme stock. I do like SeaWorld Entertainment. Have fond memories there. I remember my first pregnancy. My wife was late. We lived in San Antonio. We tried everything, and we would just walk for hours at SeaWorld in San Antonio. It's actually fun when these things are in your town because you can get annual memberships, and it's a nice place to hang out. And the one in San Antonio in the Hill Country is just beautiful. Look at the earnings per share growth, more information than you needed, but worked for me and for my wife. Look at the earnings per share growth. Notice stock really doing nothing and the relative strength getting stronger. Still in a weekly buy, no sell. So it really hasn't broken out of its downtrend, but it took out its PSAR drop. It flipped its, recently flipped its chandelier stop. Mobile breakout from a squeeze, multiple kahunas, pocket pivots. I'm not advocating longs, but this is something that should be on your watch list. And then we get the index and we don't go further. Boy, on bad weeks, you can go quickly. Biotech. Notice how many of these are above the moving average compared to everything else. This guy is developing a drug for macular degeneration, different than what Regeneron's drug has done, and that really made a lot of money for that company. They've got some positive data. Their competitor had a negative trial, that's why it popped. I suspect that this stock, I think it's $1.5 billion. I think this stock could be a $2 billion market cap because of the positive trial. So that's a 25% move from there. So it would not surprise me if you know how to trade viable gap ups and where to put your stop, like at the bottom of the gap up. You know, it's a risky play, but I bet this thing actually works. But what do I know? Moderna, I was short it. I'm not short. I want to be long based upon the pattern. I'm still, look at that market cap, too much. That's the problem. It's valuing in perfection on their cancer portfolio, and they've never had anything positive yet there. A lot of stuff being worked on. Cassava, I think this was in one of the Alzheimer drugs. I think they might have been tied to Biogen. It's come down. And then Macrogenex, this is an interesting pattern. Look at the reversal on the weekly. Mobile breakout from a squeeze, multiple kahunas, pocket pivot, person buy. I thought the data was mixed at best that they just recently presented on their drug, but some of us think it's going to be good. If I'm looking at the chart, that's an interesting looking chart. I'd rather wait for it to take out the 200, but that looks interesting. Twist. I'm looking for things that are actionable. This is a beautiful chart. Don't know anything about Prothena. Market cap is $3.4 billion. It's got earnings. It's got revenue rather. It's got earnings. I don't know if they have a product on the market. I don't know this company. discovery and development, some stuff that they've sold, cancer, Alzheimer's, of course. Chart's great. Big move up, lots of digestion, and now running again. It's expensive stock. I don't know anything about it. Probably one of the more bullish charts that we've seen today. And then I do like Blueprint. They've got a giant portfolio. This is a company that I know, but I'm not that closely involved. I've always thought that they'd be a takeout candidate. They've got products on the market. Their market cap is what? 5.7. Somebody that wants a pipeline buys them for $8 billion. I think it would be a bargain. But Blueprint, forget all that stuff. Global breakout from the squeeze and a shitty tape. Person buy signal, pocket pivot, kahuna, double kahuna not far ago. Took out its moving averages. I think that's a bullish looking chart as well. Messy, but I like it better than most. 5 beverages. I like Fizz. Why? I think the main reason that attracted me Fizz, except for the big bar here, we got a stock that's pretty much been down, and we had relative strength that's pretty much been up. Now, from this point on here, I can't really say much because now it's turned into an uptrend. But I think there's some bullish divergence there. You got a breakout here. When you look at it on the weekly chart, it looks even better. The next stock I actually bought, and I made some good money on it, and I bought it back in here. I don't know why I'm holding it, because it's already made its pop. This is another beverage maker, Celsius Holdings. I thought it was a technology play. I didn't realize it was a beverage when I bought it. Tells you what I know. Semiconductor devices, obviously been a strong group. And one of my favorites and one of my holdings, NVIDIA. I mean, it's just going sideways here at the top. Is it risk for coming down? Sure it has. It's come down here, it's come down here, it's come down there. A pullback to the 50 is not unusual. Its growth rate is slowing down. It's clearly a market leader. Does it go sideways? Probably. Would I be buying it here? No. Analog devices, popped on Thursday, didn't do much on Friday. Something to watch. Nope. I like ON Semiconductor here, trading at least multi-month highs, if not all-time highs. I'd have to look at it in another platform, or else I could go to quarterly. I don't want to take the time. But breaking out here, that's on my buy watch list with great earnings per share growth, 5 to 10 times. It's multiple, not Intel. Ambarella, talk about a successful remake. Did not see this coming. This is why you buy Bible gap ups, because sometimes they just keep on going. Look at Upstart as another example of keeping on going. All right, just going down the list. Number 7, semiconductor manufacturing. Yeah, the big kahuna here is Applied Material. It's just done nothing for months. So you kind of got your Darvas box here. You're in the middle, so I'd pass on it. I love to buy it. I love to hold it. It's a great company, but now, I mean, it just looked very sideways. This one looks the best, ASML. Imagine had you bought it in January of this year. What a move. Or even better, January of last year. Would I buy it up here? Too expensive. It's got a doji at the top spinning. Probably not, no. Taiwan Semiconductor raised prices, as we talked about last week, had a pop. It's not that exciting. I am having a hard time finding great stocks to buy and sell, folks. All right. Lithium America, I have no issue with this. Lithium is necessary for batteries. There's a couple of lithium stocks. This one does not have any revenue, doesn't make any money, so there's probably a lot of hopium in it. Pattern-wise, it's in an uptrend. Doji on the weekly would tell me to probably stay away. I mean, I'm just looking. These are the services, nothing. So these are the best groups, and I can't find anything. This one's been great, Zim. What a nice run. But you just had a doji up here. Your weekly bond, your daily bond are green. Your high jump, if you even have one, you've not been around long enough to have a high jump bar. You're extended. Earnings per share growth are great compared to your multiple if you actually hit those. I don't know if I believe all these numbers, but I look to buy this on a pullback. I think it's a little extended right now. Here's another shipper. Again, when do you want to buy these things? When the constellation of symptoms that we talk about occur. You got positive divergence on market strength. You got a mobile breakout from a squeeze. You got a break above the moving averages, a person buy signal, pocket pivots, and kahunas. Or you waited to hear mobile breakout from a squeeze, a breakout, pocket pivots, and kahunas. You don't buy them up here. It's too far gone. Great patterns, too far gone. It's a different group, but I own Starbuck. I've been in and out of this one. This one's been a big mover. It also pays a nice dividend. Not nearly as exciting as the others, and it was weak as well. Look at these earnings per share growth. Again, are these even real? Did they go up because of COVID, which is what I suspect? Are they sustainable? Probably not. Number 10, coal, I'm not even going to look at. So that's, I mean, how many great charts have I showed you? Number none comes to mind. Let me pull up my buy watch. And again, this is a watch list. It's not a buy list. And for newbies who are going to wonder, how does anybody have 30 stocks on a buy watch list? How can you monitor them? The answer is simple. The answer is technology. So these are the stocks in my list. There's 30 of them this week. Not all of them are that good. Some I might just be watching. They're put in TradeStation, radar screen, where I can look for different things. I could look for breakouts. I could look for go with flow changes, which are trend changes. I could look for pullback buys and sells. So I can monitor my portfolio and my list of buy stocks using radar screen. I can look at Thinkorswim in Market Watch, where they're listed here with a number of my favorite buy sell signals, looking for changes. I could set, if the stock trades above this, do that. So since there's only 36, let's switch it to the view that's got scorecard index, scorecard combo. You can see there's quite a few biotech, which I mentioned already. Other than that, it's a smattering of different stocks. Let me start by telling you this. If a stock is a great chart, but it's way extended, it's not in my buy list. If it's a great chart and I already have a full position in it, this is my buy list, not your buy list. I'm not adding it to my buy list. So these are not necessarily the best stocks. They're not necessarily the only good stocks. These are stocks that I have holes in my portfolio that they might fill if they behave. So Nutrien. Nutrien had a great run up here, as you could see. It's going sideways here. It looked like on Thursday with a mobile breakout from a squeeze, in a person buy, pocket pivot kahuna, positive convergence on the market catcher. And then Friday it sold off at the end of the day. If it took out the high of the day from Friday, I might be interested in Nutrien. SQM, I already own some Mosaic, so I probably wouldn't be buying this, but this is a fertilizer stock, and it just broke out to a higher high, not the highest high going back here. Mobile breakout from a squeeze and pocket pivots. Great earnings per share growth. Crocs, giant uptrend on the weekly, pullback, and what happened on Friday, a new person buy out of a squeeze. I don't know what Circuit does. You could probably figure out what it does. I can't tell that's the name. Cricket, is it a Cricket or is it a Circuit? technology platform. Broke out above the 50. It's an IPO, so it's broken out of a downtrend on the weekly. A little bit of a gap up on the weekly, broke out. I think it's an interesting pattern in this market. Above the 50, you can set your stop right below the 50. It's an IPO, you buy things at your own risk. Here is a bank, similar pattern, breakout above the 50, mobile breakout from a squeeze, person buy, pocket pivot, kahuna, pays a 3.6% dividend. We already looked at energy fuels, already looked at Fizz. This is that second biofuel stock. Here's Blueprint Medicine. Here's another biotech. Here it looks like it's already had a long run. On the weekly, you can see it hasn't. Probably has a, I would say less than 800, so it's a early stage oncology biotech. When I see this, it makes me wonder what's going on. I probably look at their news. Do they present some data? Iveric was the first biotech we looked at. Cura is another oncology company. Remember, if you don't know me, what is my specialty? My specialty in medicine is oncology, which is cancer medicine. Kill that. And you could certainly argue that something's going on here, breaking out. Might be one to look at, not an expensive stock. We looked at Macrogenex, we looked at Moderna. Here's another Vera Biotech, ran up, going sideways move, had a pocket pivot, a new person buy, and a mobile breakout. Again, another very small, this is 6.7 billion, not as small. It's got millions of revenue, so must have just launched a product. Look at this growth. In fact, they just came out with a great product for hepatitis B. Here's SeaWorld, we talked about it. Last week I said you should probably own some energy, or 2 weeks ago, there's Continental I like. Tractor Supply, I think we had this on our list last week. It actually broke out this week. Still early on in a run. It's a great company. Forget this one. It looks interesting on the weekly. It's kind of junky up here. Bottom fish doing nothing and perked its head up here. I play these every once in a while. All I can lose is a little bit. Put my stop down here. You lose less than $1. That's where I got into Tandem, a similar pattern. Not recommending it. Acacia Research Group broke out, pulled back, running again. I like that chart. There's not great charts here, folks. Travel and leisure, it's below the 200, but look at this positive convergence here. Clear the 200 might be interesting. Hilton, sideways move. Is it breaking out, or is this just going to be back into it? I don't know. Something to watch. Remember, it is a watch list. Expeditors, run up, sideways move, mobile breakout from a squeeze, new person buy, kahuna, improvement in market, positive convergence. That one looks interesting. Small dividend. Here's Zim, we looked at already. Here's a dividend play. It's a MLP with gas. There's your Lithium America. Here's a mobile games story. I don't know if I'd be chasing games with what's going on in China, but this one is an IPO, probably not for most, including me. The Beauty Health, this was a reversal on Friday. Stock in an uptrend on a week tape. On semiconductor, we looked at Texas Instruments, uptrend, sideways move now for months. Mobile breakout from a squeeze, daily bongo flipped, new person buy, pocket pivot, kahuna. And I guess you could argue that market catcher is getting better. Take out of this 200-day moving average, of which it is, looks like it's above it. So is that, I guess that might be the last conditional change. got to take out your LCC. That looks interesting right there. Applied Materials, maybe. And then Waste Connections looks like it's starting a new leg up. It's already run a bit, but that's a strong chart. Maybe as good a chart as we're going to see. And that's it. So I started this by saying that maybe we get a recovery on Wednesday or Thursday if we buy Yom Kippur. I also told you that I'm hedged, meaning I'm worried about this market. And I don't think I just showed you one stock that is so compelling that you need to buy it right now. There's some interesting patterns. There's some that might work. I'm not planning on buying anything at the open Monday. I'm going to probably play around my protection schema and maybe take more profits if the market's weak. Don't forget options expire Friday as well. Have a great week, everybody. Sorry this was not more exciting and more enlightening with more things to buy, but you got to play the market you got. And by the way, just because I think the market looks rough right now, it's 10:25 a.m. Let's see what it looks like tomorrow. Thanks, everybody, and have a great week.